So thank you very much for joining me. Again, sorry for last week's technical issues. I'm happy that they are solved, so we can begin. Thank you very much all for joining me here at converting your Forex analysis to binary options. Hello, Tommy G. Okay. Thank you very much for joining me. It's a big pleasure being here. I'm a senior analyst here at Banc de Binary, and thank you fx3.com for inviting me. I appreciate that a lot. I think this is one of the first binary option webinars, and it's a big pleasure being here. I follow fx3.com a lot, and I appreciate you inviting me to for this webinar. So before we begin, trading binary options, some risks involved. Banc de Binary is the only binary option company in the world to be regulated. So at least from that aspect, you guys can feel very comfortable. But in any case, just to go over the risk warning, trading binary options is highly speculative and carries a high level of risk. It's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Just going over this really fast. Information on the previous performance of financial instruments does not guarantee its current or future performance. The use of historical data does not consist of binding or safe forecast as to corresponding future performance of the financial instruments. To be said, information refers to derivative financial instrument. May be a non-delivery spot transaction giving an opportunity to make profit on changes in the currency rates, commodity stock prices, indices, or share prices called the underlying instrument. The value of the derivative financial instrument may be directly affected by the price of the security or any other underlying asset which is an object of the acquisition. The client acknowledges and accepts that, and there will be others which are not contained above. So I'm happy that you all recognize the risk involved, and we can begin. First, I was wondering if I should make any kind of PowerPoint for this first webinar, and then I thought that maybe it's best just to put the charts on. I think they're more interesting than a bunch of words on paper. But if I do get feedback from you guys, if I do get feedback from you guys to put things on PowerPoint, then I will do that for the following webinars. I really appreciate your feedbacks, again, because this is the first webinar for binary options. Okay, so let's begin. I picked converting your your Forex analysis to binary options. I picked this subject really because Forex trading has been around for many years now, and many traders that come to the binary arena just need to convert the information that they have to binary options. It's not a matter of studying the material from A to Z from the beginning. It's just a matter of converting the information that you have, the knowledge that you have, to binary options. Everybody can hear me? Hopefully. Okay, great. So we're talking about binary options. Any kind of financial instrument, doesn't matter what it is, deserves its own attention. If it's binary options, if it's any kind of other option, any kind of financial instrument deserves its recognized attention. That's the reason why we should treat binary options, the analysis of binary options, a bit differently than how you treat your Forex trading. Okay, as you guys know, binary options has been around for many years, but online trading only for the past 4 or 5 years. So we are really just begun here. A lot of research is still being processed, and I think that this is a great opportunity to be involved in binary options because this is only just begun. So just a small introduction to binary options. So as I said, I didn't do any kind of PowerPoint here. We're going to look at the charts. I think that's the interesting point, just looking at the market and what it's doing. Just a small introduction to binary options for those of you that have not yet traded on the binary side. It's really a matter of picking out a direction for the trade, and that you're used to also from the Forex arena. Of course, picking out an asset that you want to trade on. Money management comes when you have to pick the amount for the trade. And the expiry. Yeah, binary option is when you think you have flexibility. A binary option is, a binary itself is a matter of picking between two different options. And binary options, it's a matter of picking if you're in the money or out of the money. We'll get there. It's a matter of picking out the right direction, the right expiry for the trade. Binary, yes, it is, because there is a particular expiry. Oh, okay. I'm answering questions that you guys. I'm not sure. You guys see the questions as well? Oh, okay. Well, we'll get there. I'll answer all your questions. Okay. Great. So, the binary side of it is you're picking out a direction, and this can be either up or down, meaning either a put or a call. You're picking out an asset, of course, that you do before in regards to your analysis, the amount for the trade, and the expiry. So the expiry is something that you're not used to in the Forex arena, and also the amount is not a leverage amount, but it's the amount that you pick for the trade. Okay, and so the main difference here is the expiry. That is the main difference here between trading binary options and trading Forex. The expiry for the trade is something that we're going to look at right now. And the direction, of course, is the same in binary options and in Forex. Now, a Forex trade, let's start with Forex trade. And what does he look for? So I'm looking at the USD JPY right now, but we can check other assets. I saw something pretty interesting on gold and on the euro dollar. We can start with the euro dollar here. Premium is paid, right, but with no expiry. What about strict prices? Okay, so before we go into the differences in the analysis, let's go over really introduction. Could be that a better thing for me to do is first webinar just do an introduction about binary options and then do exactly what the analysis should be. So let's start with a binary option. Binary option is that you buy or sell, you buy a put or a call in regards to the market price right now. So let's say you have here the euro dollar trading right now around 1.3086, and that is the asset that you're trading, the euro dollar. That's the first thing you acknowledge. Okay, then you pick a direction. Either it's going to go up or down, meaning below 1.30, let's say 1.3084, what's trading right now, or above that in a particular duration, meaning that you can pick out a 10-minute expiry, half an hour expiry, or even a year, 2 months. A lot of expiries available. Now, if the price of that particular asset after that duration of time is above the strike price that you had, the market strike price, then that means that the option was in the money, and that means that you deserve a particular payout, which on average, let's say it's 70. I'm not sure exactly how much it is, but let's say around 75%. Meaning that if you invested $100, then after the expiry, if you're in the money, then you get 75% out of 100. you get $175. Okay, I think that's the most simple. Let's say, okay, let's look at this price over here. If I would trade at this time here, right here, and I would think that this price would go up, and you see the arrow, the strike price here, let's say, was 1.388. So I took euro dollar up, and let's say I took it up for a duration, an expiry of, let's say, 2 hours, meaning here, 12 o'clock. Now you see that I took it at 1.3087. Yeah. And then, after 2 hours, let's say the price was 1.3090. Exactly after 2 hours. Then, that is in the money option, meaning that the strike price was above, the expiry price was above the strike price when we took the trade, and we took, we bought a call option, and that means that you deserve 75%, let's say, payout. If I would take the opposite, if I would buy a put, and let's say I would buy that for, if I would buy that here, this would be a great trade, of course, 1.3108, and I would take it down for, let's say, 2 hours, so it will expire around here. So the expiry rate for the trade is lower than the strike price that I took the trade, and that means that I'm in the money because I bought a put option. And then again, I deserve an average, let's say 75, 72%. It really depends on the particular asset and depends on the asset that you're trading and the expiry. But no, it's not a 75% move in price. It's a 75% payout. Even if the move in price, and we'll talk about that's a big advantage in trading binary options, even if the move in price is the smallest move on the direction that you decide in the first place, you get the same payout. Out of the money, then you lose your first investment, which is known to you before taking out the trade. Because when you take out the trade, you have to decide on the asset, on the expiry, direction, and the amount for the trade. So you know from the beginning how much money you're risking on the trade. Show it? What do you mean by that? Sorry. Well, again, out of the money is, let's say here at 1.31808, I would buy a call option for, let's say, 3 hours. Then after 3 hours, this would be my expiry rate, 1.3090. And if I put $100 in investment on this trade and I bought a call option, then on the expiry, the trade will be out of the money. Okay, it's either in the money or out of the money. That's the binary part of it. So I would lose my, exactly, yes. If you win the trade, you're in the money. If you're out of the trade, if you're out of the money, that means you lost the trade. Exactly, yes. In plain words. Okay, so you need to choose the right direction and the proper expiry for the trade. You know exactly how much you're risking prior investment, and that's about it. Okay, it doesn't matter if the price moves even in the money expiry price higher than the strike price. That is in the money if you bought a call option. If you bought a put option, then you need the expiry price to be lower than the strike price. Yes, for a call, exactly. And if it's a put, then you need the expiry price to be lower than the strike price. So binary options, in a way, it's a real when you investigate binary options and you do analysis of binary options, you really investigate the resistance and support levels for a particular asset in regards to a particular duration of time. Okay. For example, Forex traders, they can be right on the direction of the trade many times, but they need something else, which a binary option trader does not need. You're not working on expiries on the Forex end. You're working on volatility, maybe, momentum. You want a big gap between the let's say the strike price, if it's an option, but on Forex, the price that you bought a particular asset, and the price that you're selling that asset. If you bought an asset at the price let's say on Forex, if you decided to take the euro dollar down here, then this move on the downside, that's what a Forex trader is looking for, because this move here involves more power by the euro dollar on the downside. The name of binary is just the name binary is just in the money or out of the money. Those two outcomes of a trade, that's the reason why it's a binary option. Okay? Binary options, so that is this strong move, let's say here, is made, you're indifferent if you take the put option, you're indifferent if it expires here or here, because you get the same payout. On the other hand, if you're a Forex trader, it really does matter if the trade, if you buy again the euro dollar here or you buy it here. There's a big difference. And that difference really changes a bit the analysis that you have to do for the trade. Another thing that you need to take into consideration is whether, if you're using on the Forex and if you're using, let's say, limit orders and so on, to, let's say, hedge your position, on the binary side, you have an expiry, and the option is going to expire, let's say, in 10 minutes. So you trade on those expires. A lot of pairs are available. It depends on what platform here. In Back to Binary, you have many assets to choose from, not only FX, but also indices, commodities, and stocks. And the same principle you need to use for each kind of asset that you're trading on, meaning that you have to choose the right direction and the right expiry for the trade. Once you have both, maybe the payout changes a bit. It ranges, I think, between, I'm not sure exactly, but about between 68% payout and can go all the way to 90% payout. Depends on the trade, on the asset, but those two major things are really important for your trading, which is direction and expiry. So, again, when you're trading on the Forex, you want these big moves here, as you see here. When you're trading on binary, you're indifferent about the move. And I want to show you guys a few examples of what I'm talking about. So I'm going to check out here the euro dollar. And what am I looking for? I'm looking for strong support and resistance levels. Guys, any kind of technical indicator that you're using, if it's RSI, Bollinger Bands, Fibonacci, anything that you're using, please understand that the main reason that you're using that technical indicator is to reach a support or resistance level that's gonna be strong. Now, what is that support and resistance level gonna give me? The support and resistance level, what it does, it gives me direction. If I understand that there's a strong resistance level for the euro dollar, let's say here, this is from the 26th, for example, and I'm just going to sign this here. If this is a strong resistance level, for example, for this particular duration of time, I'm not saying it is, but it looks as it pretty much held this level for a few hours, 1.3031. If I know that this is a strong resistance level, for example, I'm gonna have direction for the trade. Meaning that if the price of the euro dollar gets close in that particular time, when it got close to 30331, that the price gets resisted, and then I get myself a nice put option. Once that resistance level breaks, any kind of resistance, any kind of pattern, any kind of formation that you see in the market, and there are a few, if it's in a descending triangle, if it's head and shoulders, any kind of formation that you see in the market, when it breaks, when let's say a downtrend channel breaks, then you got some volatility, and then a lot of Forex traders, that's when they start trading. For example, you see that after this range here, after this was crossed, it was challenged a few times. When this was challenged, after it broke, then you saw this volatility in the market. You saw these big moves in the market. Okay, and that is something that a lot of Forex traders are looking for. Okay, you see a 1.3031 line holding on the 26th, and now we're trading with a lot more volatility than what he had in this particular time area. Another example, if we go to gold, I'm going to go back to the 25th, and this area over here. Okay, this is a small. You see these channels, these ranges are really small. They can go from a duration of, let's say, 3-4 hours to a duration of even 50-60 hours. But here you see that gold was trading between 1463 and 1467. Okay. Now, if I indicate a range, now when this range breaks, then you got this volatility. Then you got these big moves, and then you got that gap between the price that you bought, let's say, an asset, and the price that you sold it. And that's what Forex traders look for, that volatility. Well, for me, if I know that I'm trading on a range, then I don't need volatility. Okay? I'm going to get the same payout if it's 1 pip difference between the strike price and the expiry price, if I got the duration right and I got the expiry right. Okay? Is that something that's understood? All right. Can you cash in before expiry? For some options, I think you can. For some, maybe you can't. I'm not sure. It really depends. But I'm pretty sure that is a very possible alternative for a trade. Okay? So, if I recognize these patterns, these ranges in a particular asset, then once it does break, then you got all this volatility, all this momentum. If you go, let's say, to RSI, okay, then you got RSI trading all the way to 78. The momentum between 50 and 78, that is a very strong momentum. And then what you have is on the Forex side, you got a big gap, and that means more profit to you. On the binary side, if I understand that this is a pattern, that this is a strong resistance level, then this is what I do. I'm looking at a resistance level at 1467. Then if I would take a trade here, down, again here, I have a call here, and a call here as well. Okay, which percent of being right do you usually have with that technique? Let's talk. A winning rate is when you discuss a winning rate, you need to discuss two major things. If you, in regards to money management, if you use the same amount for each trade, then this is how you do the winning rate. This is how you calculate it. Let's say you have a payout of 75%. And that means that you get 75%. If you trade on, let's say, every trade for $100, that means that you get $175 back if you win, and if you lose, you lose the $100. So a 50-50. If you're 50%, let's say, if you're 50% of the time right, you're not gonna be break even. The calculation is you take 100, you divide it with 1.75, which is the payout, and then you get around, I'm not sure how much is 100 divided by 1.75, but it's around, I think 57%, I'm not sure. Correct me if I'm wrong. Around 57%. That means that if you're right 57% of the time on the trades, then you're break even if it's a 75% payout. If you're right 60% of the time, then that's you are making a profit. Okay. Now here, if I understand that you see these arrows that I did here, every one of these, this arrow, for example, if I understand that 1467 is a strong resistance level and I take it down, it's not enough just to take it down. You have to choose an expiry, because if I would have chosen an expiry, let's say from here to here, I would lose the trade. Okay, so how do I pick the expiry? From the research that I did, the payout is, for each trade, the payout is different. It's a matter of I'm just answering who decides the percentage of the payout. The payout is derived from that particular instrument, that particular asset that you're using, supply and demand, I think, for that particular binary option, and from quotes that are received from the market maker. Okay. But you know, when you take out a trade, you know exactly what's going to be the payout for the trade. So, guys, what I want to show you here is how to choose an expiry. An expiry is something really important, because I read an article that said that, let's say, Forex traders, they're right a big amount of the time on the direction. And that can be very useful in binary option, because if you're right on the direction, then all you need to choose is the expiry for the trade. Now, how do you use it? From the research that I did, I'm looking at around 2.5 candles after the strike price, after I took the trade. Now, if you check out here, check out always after, if this is the resistance level that I chose for this particular asset for gold, I'm always going to take around 2.5 candles after I took out the trade, and that's going to be my expiry. Meaning that if I'm using a 10-minute chart here, then I'm going to check out. I'm going to check out an expiry of around 30 minutes. If I would choose a 1-hour chart and identify a resistance level here, then the expiry for the trade, I would look at an expiry of around 2.5 candles after the resistance level was triggered. Okay. So when you have a particular support level or resistance level, really the expiry for the trade is derived from the time chart that you're using for your analysis. Okay. Yeah, the bigger, let's say if you're using a daily chart, just asking what is, it depends the period of time that you're using. If I'm looking at a daily chart for gold, then taking out a trade for a 10-minute expiry would be too fast for a daily chart. A daily chart is not fast enough to give you good analysis on a 10-minute trade. Let's say a 5-minute chart, which is a lot faster than a daily chart, can give you proper limit orders in the market and movements in the market for 10-minute expiry trade. A few words about resistance and support levels, which are so important in binary options. Those resistance support levels, they give you direction. Some of the resistance and support levels in the market are based on limit orders that huge institutional or funds, hedge funds, any kind of big participants in the market. That's how they put those limit orders in the market, and then you see a strong support, let's say, level in the market. When you have a fundamental event taking place, then those limit orders are going to change. They're going to change their grounds. After we saw that big drop by gold, just a moment. This big drop by gold. Now we're looking at completely different limit orders, completely different resistance and support levels than we were looking at before. Okay. So always remember that you're looking for those support and resistance levels. They're going to give you that direction. The time chart, the time frame on your chart is going to give you the expiry for the trade. And once you pick out the expiry and you know the direction, then you got yourself a trade. Okay. Another example I want to show you guys. USD JPY. All right, I'm going to go all the way back to the 25th. This is something that I noticed on USD JPY. This level over here, around 99.26. Well, you see that, well, don't mind this huge drop, and this was rumors from Associated Press, if you guys remember the Dow also falling. But you see that this particular line here on the USD JPY around 99.26. This was a nice support level for at least a 24-hour duration here, 23rd and 24th. Okay, and 99.26, that was a support level that I found here. Now, if you're a Forex trader, well, you're looking for big spikes up and down. You're looking for this volatility. But on binary options, you don't really mind. You just need the support level to be strong, and then you got yourself a strong trade. We're looking at a 10-minute chart, meaning every candle is a 10-minute trading session. And then let's check out the expiry for the trade here. And that's what we're looking for, guys. We're looking for a support level. We're taking out a trade once that support level was triggered. And then we're going to take also an expiry that is derived by the time frame on the chart. So let's see what we find here. For example, after the USD JPY, I use around after 3 times that a support level is challenged, then I assume that it's gonna follow up for more challenges afterwards. So let's say around here, you pretty much understand that this level 99.25, 99.26 on USD-JPY, this could be a strong support level. You can find that in many. You can use technical indicators to confirm that. If we have time, I'm going to talk about those technical indicators that can confirm a support level. But let's say, for example, we understand that 99.26 is a strong support level. Now, once it was triggered here, okay, so this was a call option here. Okay, it was triggered here. This was a call option over here. Now, for what duration? I'm looking at this red candle here. Okay, do you guys see this red candle that I'm pointing out to? Well, hopefully you see it. Okay, and I'm not going to trade. This is a 10-minute chart. I'm not going to trade the same candle because you see that it does drop a bit. So if I'm going to take a 10-minute expiry on this, I don't have that buffer, that cushion. I don't have that premium that I'm looking for to safeguard my trade. So I need around 2 candles, 2.5, even 3 candles after the support level was triggered. Well, it means that if I understand the 99.26 is a strong support level, it could break as it did here to 99.19. If I'm trading on the same candle, I don't have that. I don't have enough reserve to sustain a very fast break in that support level. So I'm not going to trade a 10-minute expiry for this candle. I'm not going to trade on the candle. I'm going to trade around 3 candles afterwards, and that means I'm around here. Okay? If I'm looking at this candle, this was another trade. So I'm looking at expiry of around here, and that's my buffer. That's my reserve, and hopefully that's going to bring me to a situation where my winning rate is going to be a lot better, and that's what I'm looking for. I'm looking for the best winning rate possible. So if this is a 10-minute chart and this candle here triggered that support level that I found, the expiry for the trade is going to be around 25, 30 minutes. And that means that I'm over here. Okay? Is that clear, guys? And that is something that, for example, when you're looking at, you're using the same indicators as a Forex trader. You're using the same charts, everything. You just have to change the way you trade, and then you really understand how this amazing world of binary option works. And it's a matter of choosing the direction, finding the support and resistance level, and then finding the right expiry, which is derived from the time frame on the chart. Well, it's not a matter of, well, I'm not saying, I'm just going to reply in 20 minutes because there are 2 candles blue, right? What I'm saying is, for example, here, this arrow, you know what? This here, I'm going to delete this, and I'm going to be even more. I'm going to say this candle over here triggered this support level of 99.25. So let's say I'm buying a call option here, and I'm saying that this is gonna the USD JPY is going to be higher than this line here. For how long, though? So you see that if I would trade on the same candle, for an expiry of 10 minutes, then I would land on this red candle here. That means that I'm not for sure. Well, nothing's for sure, but the chances for me being in the money are not as strong as I would give myself a nice buffer, which is around 2.5 candles afterwards, meaning that I'm around here. Okay? The whole difference is not trading a 10-minute expiry for this candle here, because it's going to bring me to the next one, which is here. The support level 99.25, that can break a bit, but so I want to sustain that break. I want still, at the end of the day, I want to be in the money. At the end of the day, I want my price to be higher than what it was before. Okay, and I understand that 99.25 on the very short term that could break. But as a whole, this is a support level, so it should sustain. If it breaks, it breaks. And then you got yourself volatility, and you can play both. You can trade on the binary side. When you got low volatility, you can trade on a range between support and resistance. And then when you got that volatility, you can go over to the Forex arena and trade on the volatility. That can be a very interesting thing to think about as well. But my expiry is around 3 candles afterwards. No, it doesn't matter if the price, you are judged by the expiry, by the price of that particular asset on expiry. If it goes down before that, but if I took the trade here, okay, I took the trade. Let me try to see if I can. Just a moment. I want to make this more. Let me try. No, I can't. All right. But I'm looking at, this is the trigger. This is a support level triggered. It dropped a bit. That's fine because my expiry was 2.5 candles, 3 candles, which was here. That's the whole thing. A support, or this can be either a resistance level. If we take a resistance level, for example, okay, this line here, 99.48. Okay, so I had, if I would have recognized this as a strong resistance level, then I got a trade over here. I got a trade over here. I got another one here. I got another one here. Eventually, it's going to break. You see, when a strong support, a resistance level or a support level breaks, you see that you get this volatility. You didn't have it before. You had a range between 99.48 and 99.26. You had a range. But now, you got this volatility after it breaks. But, for example, here, if I would take this trade for only a 10-minute expiry, maybe I would end up here and I will lose the trade. But if I'm looking at a 30-minute expiry, then my situation is a lot better looking at this chart right now. Expiry is the only important factor, win or lose. Well, what I'm saying is the direction and the expiry are the most important things when you're trading binary options. Indicating a strong support or resistance level, that's the first part. After you do that, what we did here between 99.26, 99.44, once you do that, then the second thing you need to find out is what the expiry. The expiry is using those candles, 2.5, 3 candles from your initial, from the time that you took the trade. If it's a 10-minute chart, then that's a 30-minute expiry. Trading on range, that is fabulous in binary options. Downtrend channels, uptrend channels, any kind of channel. Here it's the same level. It's 99.26, 99.48. This can also be a downtrend channel. Okay. I don't see it right now, but just use your imagination a bit. If I got this here, this here, and the price is moving down here, up here, down here. Once you have a breakout, many times you got volatility. Not always, but a lot of times you got volatility once it breaks these channels. But until it does break, then you know exactly between two lines, between two dots, only one line can cross. So you know exactly what the next resistance or support level is going to be. If it's a 10-minute chart, then we're looking at an expiry of what we said. Okay, guys? Hopefully this was useful to you. Well, it can go back to the channel. I don't know, but if it's trading, if you recognize a channel, it's really great to trade on the binary side because the channel is going to give you direction, and the expiry you get from the time frame on the chart. So if you're looking at, and you can get it on a 30-minute chart, you can get it on a 1-hour chart, any kind of chart that you get a channel, that can be fabulous for your trading. If it returns to a channel or not, I'm not sure. But when it does break, okay, great. I'm happy you enjoy this. Hopefully, this is just to begin with. I know a lot of you guys are more used to Forex, and that's great. Hopefully, we'll have more webinars on binary options, and we can talk about particular technical analysis, trading on events, fundamental analysis. Anything that you do deserves a different attention when it comes to binary options. The company is okay, yeah, in Cyprus. Well, it's 30 minutes the time you trade. When I trade, I check out particular assets and I look for an opportunity. It can be on the 8-hour chart, and then of course the expiry for the trade is going to be different. It can be a 2-hour chart. Any kind of chart that you're looking at and you find an opportunity, opportunity is, again, a strong support resistance level. And when you find a strong support resistance level, it doesn't matter what kind of time scale you're looking at. I'm just going to go down from, let's say, a 4-hour chart all the way down to a 5-minute chart. Check out find a strong support or resistance level. Let's say this 5-minute chart here on the USD JPY, you see that we have a strong resistance level. Was a strong resistance level here at 97.95. Okay, so I find, and this, if it's a 5-minute chart, of course, the expiry for the trade is going to be different than on a 4-hour chart, for example. Okay. So here you see again, this is a call option over here, and over here, and over here, here. When you recognize these support and resistance, then it doesn't matter what kind of time frame you're looking at. It's just gonna change the expiry for the trade. Okay, guys? I'm really looking forward to feedback. Send me emails. And next time around, we can talk about other issues as well. Yeah, I think you got it from fxu.com. Thank you very much, fxu.com, for this. I really appreciate this. And yeah, thank you really much, all of you. The best of luck to all of you, and hopefully we'll do this again soon. Well, how's the easiest way to learn? I think the best way to learn is if you have, just to understand your position right now, if you have a lot of experience on RA, and go from there. Yeah.